Bank of Canada has lowered interest rates again, this time 0.5%. Of course, the rationale among the establishment is that this is like taking out insurance on the economy. We're just giving ourselves some cushion so that if the economy tanks, we can keep our debts financed. We've covered this in many videos before, particularly in this one, Canada is being set up to fail. Bank of Canada Governor Stephen Poloz surprised everyone with an interest rate cut just earlier this year. Oil prices were plunging, growth models were faltering in the US and China, so the interest rate cut did buy us some time. And in a nutshell, cutting interest rates makes financing debts easier. And that's it. That's why central banks keep doing it. And that's why governments love it. They can keep piling on debts and then just kick the can down the road. Poloz really should consider himself lucky that he can still cut rates. The Federal Reserve in the United States has been stuck at zero for a while now. And that's why they started quantitative easing. It's either that or negative interest rate territory, which is what some European banks are doing now. And if the Fed ever tries to raise their interest rates even by a fraction of a basis point, they'll likely burst this global fiat currency bubble. The game among the elites has been a slow, gradual, but deliberate backing out of the dollar. We've seen this outside the Western Hemisphere where gold is retaking its place as a store of value. And as for Canada, well, we're diversifying for sure, but our economy is still very heavily dependent on the United States. And as well, financial troubles down there could spell huge troubles for our borders. I mean, there's a lot of people in the United States, and Canada is mostly a large, empty landmass. So when all hell breaks loose down there, there's going to be a lot of Americans that are going to want out. And not that Canada is a greener pasture, far from it in many regards, but if the American dollar is literally worthless, well, it's hard to imagine a world where Canadian loonies and Mexican pesos are worth more than the greenback. But hey, maybe this will be the perfect time for them to introduce the Amero. Also worthy of noting is China's economic bubble. It looks like it's deflating, and while the Chinese are more likely to rebound on a solid footing, the fact is the Chinese buy a lot of Canadian raw materials. And as the Chinese slow down, they'll just stop buying as much, and this will affect Canadian prices and resource sector jobs. So basically, guys, get ready for a recession. We've been gearing up for this since 2008, during all the bailouts and stimulus packages. Nothing was fixed. Nothing fundamental was addressed. The elites literally printed money to paper over all the problems, and now those problems are resurfacing, except they're much worse. So while the corporate state media is starting to drive the narrative that we are in an economic downturn, brought on by many external factors that can't be pinned to a single person, organization, or event, well, Press for Truth is calling them out on their bull. These economic problems can be deduced to relevant factors, and they are central banks and fiat money. Thanks for watching, guys. If you found this info useful, click the like button and also share this video with your friends and family. And check the links in the description to find our Investigate Bilderberg t-shirts and also to where you can donate to PFT, because we're truly independent and we rely entirely on support from you, the viewers. So stay tuned, guys. We're going to have a lot more videos coming soon to pressfortruth.ca.